I'm going to ask you essentially, how do you see your wealth growing in the next 10 years? Where should you be investing? Now, essentially at GCP Global, we have been tripling our wealth in the last 10 years. And essentially, we want to share with you in today's video how you as well. Gentlemen, the ability to invest and double your wealth is key. But essentially, if you have only been investing in Singapore stocks, can you actually do it? The answer is definitely no. Let me just dive in and actually steer you towards what you should be looking to invest in tech stocks, particularly now that we are going or undergoing through a corrective phase in tech stocks in the US, which actually gives you a very good opportunity to be positioning. Because remember, ladies and gentlemen, what is risk? What is uncertainty? Uncertainty is the range of outcome in terms of the pricing. But what you can be sure is that in a correction, as what you're seeing in the market now, the probability of buying on the low side is much higher, which means that if the probability of achieving a higher outcome at a higher price comes in the future, this means that buying low now essentially is the key thing you should be seizing at. So when it comes to uncertainty, market uncertainty, we embrace it at GCP Global. But of course, this is different from risk, because risk and uncertainty is complicated by the markets. Now, risk is the ability or the possibility of losing permanent capital, and that's what we are guarding against. All right. So essentially, in our class, essentially coming up on the 19th of March, one of the key things we want to stress is this, okay? And this, ladies and gentlemen, is essentially a few key things that you would become very obvious, Now, you see, this is the performance of three indices. One is the STI index, enumerated by the blue line. The second one is the SPX index, which is actually the S&P 500 index, and the SSINFS, which is the S&P Information Technology Sub-Index, or ETF. Now, how have they performed? If we go back to look from the beginning of 2011 right up to the beginning of this year. And you can see, ladies and gentlemen, if you had invested only in Singapore stocks, you notice that essentially, the blue line is and has been flat for the last 11 years. Yes, ladies and gentlemen, how do you make money if you just invest in SGX stocks? Even if you have invested in the banks or the REITs, because the banks and the REITs now form 1/3 composition of the 30 stock STI component stocks. And yet, despite the good performance of the banks and the REITs that's inside the STI, you notice that the STI has been flat. So if you actually entered the STI on the 31st December 2010 at 3190, we are currently STI at about 3004. So essentially, you're only up like barely 200 points, not even 5% in the last 11 years. So you ask yourself, ladies and gentlemen, how does one triple your wealth, in the 11 years, right? And if STI has not been able to do it, what can you actually do? Because being a sharp and a smart investor, you must know where to look to actually be doubling or tripling your wealth. So look no further, ladies and gentlemen, because at GCP Global, we have been teaching for the last 33 years that the US tech stocks, are and is an area that should be de-rigged in your portfolio. And let me tell you why. Right, in this chart, as you can see, the second one, which is actually the white line, it is actually represented by the S&P 500 index. You can see that they have moved, okay, from this level of less than now it is actually in this particular horizontal bar, less than about 1,750 points, okay, way back in the beginning of 2011, right up to 4,713. That's roughly up 300%, in the last 11 years. And it's not surprising because, ladies and gentlemen, the S&P index in the last decade has been one of the most outstanding decades. right? It is actually up by 13%. In fact, you may say, wow, after a long decade of outperformance, can it continue? The answer is, and most probably will be, yes, because historically, the S&P index, since its formulation way back in 1926, right? So even incorporating the 1928 to 1939 depressions, S&P index has been able to deliver for investors like you and me an annual return of 11% year after year. Now, with inflation accounted for, it's 9% per year. Can you just imagine that, ladies and gentlemen? And in this last decade, we have grown 13%. Now, take out your calculator now, okay? And you punch in, if it's 13% growth, how fast do you double your money? Yes, ladies and gentlemen, it's almost every 6.5 years. So in this period of 11 years, you basically was able to double or triple your money. But what happens if you actually attend GCP Global classes and go into the red line? The red line is the S&P 500 sub-index for information technology, okay? And in this sector, it includes component stocks like Apple and Microsoft. Look what has happened, ladies and gentlemen, okay? Now, the red line, which is actually the starting off is less than 500 points because it is on this bar. And by the end of the beginning of this month, or rather in January, it's gone up to 2950. So from less than 500, it has climbed, and particularly so in the last 2 years because of the pandemic, it has soared, to 29650. So from less than 500 points to 2950, we are up by almost 600%. It's a stupendous performance, ladies and gentlemen. So you put in $1 million by the end of the 11th year here, that $1 million is worth $6 million. That's how you double and triple your wealth. And that's what we do at GCP Global in our various classes. So if you actually read, for example, this come out from the Business Times or Straits Times of Monday, January 10, 2022, you notice that some of the Singapore industrial champions are rewriting their playbook. Why? Because it's inevitable. They need to do it because if you look at their huge underperformance of the SGX stalwarts, the likes of, for example, Keppel Corporation, Sembawang Industries, SPH, Stats, you notice that essentially all this has been underperforming stocks, not for just a few years, but already for a decade. All right. So would you want to continue to put faith in them or actually make a switch out to the profitable areas which are likely to continue to replicate their success? Okay. So of course, this is not investment advice, but when it comes to investment, we assess the probability of success as much as important as helping you to ascertain the fair price and when this outperformance will happen. So recognizing what cannot be invested, in this case, SGX stocks other than REITs and banks, eradicate all this from your portfolio is the first step for you to be putting and looking and taking your next step to be making money and multiplying your wealth. All right. If you continue to stick with the old names, you notice that hardly anything will change much. And the share price is the best predictor of this likely phenomena. All right. So moving on, ladies and gentlemen, this you can see are some of the subsectors of S&P. Right. As you know, S&P subsector comprising 500 stocks has 11 subsectors. So essentially, for example, if you look at the S&P information technology sector, you notice that over 1 month, 3 months, 6 months, 1 year, 3 year, 5 year, and 10 year, you can see that over 10 years, it is actually up 23% for the last 10 years. In fact, it's been like that for the last 11 years. So once again, take out your calculator and punch in. Okay, you notice that, oh my God, essentially, if a particular sector grow, right, not just a company, a sector as a whole grow at 23% year after year, how fast do you double your money? You are correct. Almost 3.5 to 4 years, you double your money. So do you want to be looking at these stocks in this particular subsector? Well, if the answer is yes, then do join us for our class, on the 19th of March this year. Now, you are actually eligible to be signing up for the early bird special, so do grab it, and we will be delving deep into how to properly position your portfolio to be investing in the FANGs, which is actually your Facebook, Amazon, Apple, Microsoft, and Google. Of course, Facebook, there has been some transformation changes based on this last set of results. So we'll be analyzing whether it's still be worth looking at within the FANGs itself. Okay, but one thing for sure is that doubling your money within tech is key and has been the case for the last decade, and I believe that it will continue to be the case in the next 10 years. So how do you be able to benefit from this? Do join us for our class. Okay, so as I said, if you look at GCP Global website, I've shown as well as shared my experiences in doubling and making money and tripling my wealth, in tech stocks for the longest period. So, for example, you look back in our December article, just December of last year. Now, last year was a period where my 10th anniversary, of holding Google, and Google then became the next stock that actually returned me 1,000%. Yes, ladies and gentlemen, you did not read it wrongly. It is actually up 10 times. Okay, up from my buy price of less than between 260 to 280 10 years ago. So when it actually hit 3,000 last year, you notice that essentially that's a 10-time return. And yes, because of the market correction now, the price has fallen back down to 2008. So do you go in and buy more? Well, for me, it's definitely yes. So in my class, I will share with you why even after a stock price has gone up 10 times, what are the key parameters, which are the metric, what are the measurement that you use, what are the consideration that will help you to continue to double up. Okay. Now remember, in the words of Warren Buffett, the best stocks are the ones that you should be holding forever. And to paraphrase myself, is that some of these best stocks, when they have opportunities like this right now, market corrections, these are your best times to be going in deeper and accumulating more, so that you can hold forever, so their profits can even triple again, hopefully in the next 10 years. So hope you enjoyed today's video. Do subscribe and like and smash our like button and become a subscriber. Send us an email to gcpglobalsg@gmail.com once you become a subscriber, and recommend a friend so you stand a chance of winning a lucky draw at the end of each month. Cheers and have a good week ahead.